A 13-week cash flow forecast does not need to be complicated. Its job is not to look impressive. Its job is to show when cash pressure becomes real. For many directors and business owners, the information is already there, but it is scattered. The bank balance is in one place. Customer invoices are somewhere else. HMRC arrears are in another folder. Payroll, rent, suppliers and loan payments all have different dates. A simple 13-week forecast brings those pressure points into one view. Step 1 is opening bank cash. This means the cash actually available at the start of week 1. Not hopeful receipts, not invoice value, and not accounting profit. Just the money that is really in the bank. That matters because profit and cash are not the same thing. A business can be profitable on paper but still unable to meet the next payroll, rent payment, tax date, or supplier demand. Step 2 is expected receipts. List them week by week. Separate receipts you are confident about from receipts you only hope will arrive. That distinction matters. If the forecast only works when every customer pays perfectly, it may be more of a wish list than a forecast. A useful forecast shows what is likely, what is uncertain, and what happens if a key receipt slips by 1 or 2 weeks. Step 3 is unavoidable payments. Wages, rent, insurance, finance payments, critical suppliers, VAT, PAYE, corporation tax and HMRC arrears should all be visible. If a supplier is essential to keep trading, show that clearly. If a tax date is approaching, do not bury it. If HMRC arrears are already overdue, separate old arrears from current tax as far as you can. Step 4 is closing cash. Opening cash plus receipts minus payments equals closing cash. The closing cash from week 1 becomes the opening cash for week 2. This is where the forecast becomes useful. Which week goes negative? Which payment relies on one customer paying on time? Which tax date creates the squeeze? Which supplier has to be paid to keep the business operating? Step 5 is documenting your core assumptions. Write down what the forecast depends on. For example, customer A expected to pay in week 3, VAT due in week 4, payroll due every Friday, rent due at month end. Keep assumptions visible so they can be challenged. Then update actual cash every week. If receipts slip, update the next week's. If a payment is delayed, show the effect. A 13-week forecast does not tell you every answer. It helps you ask better questions. Is the business short of cash temporarily, or is the gap getting worse? Is the issue late customers, weak margins, tax arrears, loan repayments, stock, overheads, or something deeper? Can the business meet current obligations as they fall due? Are directors taking on new credit while knowing the forecast is already under pressure? If the issue is visibility, Business Decoded can help organise the numbers, KPIs and warning signs. If HMRC action, creditor threats, guarantee exposure, payroll risk or insolvency concerns are live, move into the business debt route and speak to a suitable professional. DebtDecoded provides educational information and preparation tools only. It does not provide legal advice, tax advice, regulated debt advice, insolvency advice, creditor negotiation, representation, or a recommendation for your circumstances. If you need more information, guidance, and tools, visit www.debtdecoded.co.uk.